Right. Morning, everyone. Let's get started. Okay, the markets are closed for the 4th of July holiday on Friday in the States, but we did have a hell of a lot of stuff that's obviously happened for between Friday's session and our market open. That's obviously the Greece story. We'll just move a little bit forward. We had Greece, 60% no vote, basically choosing not to accept the creditor's terms. What happens next is still up in the air. We've got the the potential to walk away from the Eurozone. We've got the potential for them to still come to some sort of a deal, albeit on, much better, much, you know, better terms in terms of a write-down to their debt. Most of it probably would have to be forgiven. They'd also probably have to work in some other terms. Whether or not that happens, I just don't see how the Eurozone can allow that to happen with the rest of the Eurozone members, a lot of them being under heavy debt and having put them through some really hectic austerity measures back in the 3-4 years ago. That would just set a terrible, terrible precedent in my mind. So there's a lot to think about. We had more than that happening as well on the weekend. So at the end on Friday, I believe, in China, regulators came out. They made tons of changes there. They've basically created some sort of margin lending facility for the stock market, the state-backed margin lending facility. They also have allowed real estate and certain other assets to be put down as margin deposits for the stock market. That's going to get exciting at some point because that could end up taking the freaking stock market and the housing market down all in one go. So that you had that going on in China overnight. That's obviously the reason why China was up as much as it was. Hang Seng getting hit equally as hard, maybe a bit out of a shift out of Hang Seng and into Shanghai with all these new measures coming in. But there's just so many asset prices moving drastically this morning. So you can see there Australia, the Kospi, the Nikkei, all getting hit between, call it 1.25 down to 2%. That's all on the back of the Greek no vote. We're seeing currencies have some relatively solid moves this morning. Obviously, dollar strength mostly across the board, emerging market weakness across the board. Euro a little bit weaker, but only mildly so, about 0.5%. And then big moves in the commodity markets. I mean, we've got oil off by 3.5% on light sweet crude. We've got copper down 4.25. I mean, that is a beating. We've got platinum down. I mean, so if you look across the board, we're seeing some relatively big moves in the treasuries, especially in the U.S. 2-year. So if you look across the board, there's enormous moves in asset classes, but everywhere. We're looking at bonds, we're looking at FX, we're looking at indexes, and I think that anytime that you see that really creates that sort of volatility, begets more volatility, especially when you're seeing it in broad market terms across the globe, across all the asset classes, because all of a sudden that livens up all of the hedging and all of the trading against and protection and that sort of thing. So that's this hopefully can be a catalyst to really get more things going. And the other thing that's out this morning that we haven't talked about, that came out only about 45 minutes ago, is that Yanis Varoufakis has resigned. That's given the market a little bit of hope for whatever reason. I don't know why he's resigned. Yesterday and the last week or so, he said he would resign if they voted yes, then they vote no, and the guy resigns within 12 hours or so from the vote. So this is it's a really interesting twist to the story. I have no idea what it means, but I think that today obviously is going to be a very interesting day. We're going to see a big move in share prices today, and I think that you just got to be calm and be patient and wait for the market to really show its hand. There's a lot of big picture things playing out, but one thing that I'll throw out there, and I'm not saying that this is what's going to happen, but most of these situations where the market is kind of moving sideways, waiting for a result, when they when they finally do get the result, usually there's been a letdown. If I can think back and I can remember all the, these past sort of situations, it's not just like instant relief, that the market starts to go up. This obviously was not the positive result that everybody was hoping for, but the fact of the matter is that it's usually, it's followed by a little bit of a relief rally, maybe just small, maybe even only temporary for like a morning rally, for instance, and then it fades from there. So just keep that in mind. I mean, I wouldn't be surprised if that's really what happens. I just don't see a lot of light at the end of the tunnel here either way. There's nothing for markets to get excited about and back into this. So I think very quietly, markets have stepped into a really high risk scenario, obviously, and they've been waiting. Everyone's waiting for the relief of this being over, but at the same time, fundamentals globally have kind of broken down a little bit, and that's going to potentially be a big weight on the market's shoulders over the next little while. All right, corporate action today, just a couple stocks going ex-div, FBR, STP, and TAS. In terms of market data, we've got German factory orders that were out this morning, a slight beat. And we've got U.S. PMI, market services PMI, and ISM non-manufacturing today. Okay, let's get into the maps. Here we go. All right, so I'm going to be a little bit broad here, going from one thing to the next, different asset classes and things. First thing we're going to look at here is the ALSI future. So this is what I call a incredibly symmetrical head and shoulder setup here. We are opening up this morning and testing the 200-day moving average on the ALSI. For me, if we drop this, our recent lows, which are at about 45,360, just call it 45,350, 45,350 as the recent lows. If we drop that level, which we're in these sort of markets terms, a spitting distance away, 350 points. So it put us on a 1,000-point down day. It's not a far cry from here. If we drop that level, things can really get messy, and I think you gotta pay attention to this closely. This pattern is really, really, really clear cut. Like I said, I don't see that any reason why this can't play out. So that also I think makes it a big risk and a big possibility that this thing can unwind and unwind hard down to fill the target. And this thing drops that support level. Our target is going to be literally 400 points lower, 4,000 points lower. So that's a massive target, to say the least. Okay, the next one we'll look at is the Aussie dollar. So just to kind of go and this is kind of throwing on the back of going on in tandem with the Chinese story. These guys are really the worst affected. If you can, throw anybody else in that camp, they're so close to China. They're exporting so many resources to China, and they also they get a lot of spending, a lot of trade deals all together there. So this is probably the biggest affected. You can see this is smashing down to a 6-year low this morning in the Aussie dollar. And I think it's going to get worse before it gets better. Our target on this is really going to be all the way down to about 70 in the Aussie dollar. So just keep that in mind. We've got quite a ways to go, I think, in this breakout. Next one we'll look at is AVI. So we're going to bump out to a 2-year chart here. And you can see breaking out of a really nicely formed bull flag here on AVI. Came down, tested the it had a huge run. Going back from a year ago, we ran from 52 all the way up to 88. Only pulled back down to about 76, but came right into the 200-day. You can see here, tested the 200-day at least 4 or 5 times, and then breaking out to the upside. And I think that this thing's setting us up to move into the 90s. So just, remember that if you're looking to get involved there. Next one I'm going to show is Tencent. So this thing is now only down 6%. It was just down 8% about the time when I started this freaking thing, moving around like crazy. Sorry, let me run that from there. And you can see we very, in one move, this is how big this move was today. We talked about the other day. Let me just zoom in a little bit now so you can see it a little bit better. But we had this this descending triangle, which we broke out from. We got a beautiful breakout, and it was looking like we were going to trade up to 180 on 10 cent, and then in one move today we had a move all the way through support and into our next level of support. That's how hard this thing got hit. So as we speak, we're down about 6%. We were down 8+%. Sorry, someone told me they saw it down as much as 10. But bouncing a little bit off the lows here. I don't know why this one's getting hit so much harder maybe than the market. Obviously, it's probably a little bit more high beta than the rest of the market. But bottom line is we're kind of coming into our next level of support here. And I would say that this 140 level would probably be the target from the breakdown of this anyway. So and Nasdaq's obviously going to get hit very hard here on the open. We have to wait and see how this thing's going to settle out, but just keep that in mind. Big open down for Nasdaq this morning. Is this going to be coming into support already? Well, we're going to have to wait and see, but quite an ugly day for 10 cent. Next one we'll look at is Tiger Brands. So Tiger Brands, you can see bounce into its 299 resistance on Friday session. Failed there a little bit, not convincingly. Just kind of pulled back a little bit off the level as we tested it. But the big picture here, I think, is not exactly all of a sudden looking so bullish. So definitely some sort of level here around 300, and failing at that level. If we start to turn down a little bit, then we're going to have to see probably a retest and hold at 270 to see it go any further. All right, and then the last one we're going to look at is Anglos. So we haven't shown Anglos in a while, but we took out the lows here in Anglos in the last couple of sessions, and we've really just been consolidating down here. So what I was just looking at, and I was trying to remember where the bottoms were, and this was, so let's go out all the way to a 10-year chart. Now this is in Rand terms, okay? We bottomed out at around 133, if I'm not mistaken, and yeah, somewhere down there, around 133, call it 135 in Anglos. But let's look at the London chart. What the? Oh, sorry. All right, let's look at the London chart, and you can see here we're actually coming into our weekly close lows, going all the way back to 2009. Now, I think intra-week this thing traded down to like £6 something, if I remember correctly, back in 2009. But we're going to probably trade below what was the weekly closing low in the next session or two. So we're definitely going to open up below it this morning. And when we close at 9:02, we're definitely going to open below 9 this morning, especially with copper getting hit 4%, crude oil getting hit 3.5%. Just the mining space across the board getting whacked so hard. So we're going to see that taken out this morning. If we get a close below that, that's really bearish in terms of a weekly close. So just keep that in mind. I mean, the commodity space obviously is hugely out of favor, but you just cannot underestimate how bad things need to get before they can actually turn around. So picking bottoms in those stocks, still the wrong play. Don't sit there and try to pick bottoms there until you see the shares really puke. They've got to get totally gutted into ridiculous numbers before they can turn around. And that's it for today, guys. Good luck out there.